Of NPC Markets Morning Call, 11th of September 2025. Headline today, Oracle drives market higher on rapid expansion of AI data centers. So, we had Oracle up nearly around the 30% mark overnight. Those earnings were out after the bell yesterday, and it was already up 27%. It's already in the market here. Overall, but I mean, really positive for Oracle to, to consolidate that move and then even push a little bit higher. It was an absolutely outstanding result, not only for Oracle itself, but really the entire AI data center thematic overall. So the multi-cloud database revenue soared more than 1,500% year on year. And basically, they've been very smart. I mean, Oracle's been around a long time. Was one of the largest companies in the world, before it got demolished, in the 2001 sort of tech bubble. But but Larry Ellison was the richest man in the world for many, many years, and then they're playing some serious catch up here at the moment. So companies projecting Oracle Cloud infrastructure bookings could exceed $500 billion. That's trillion with a T, not billion. This momentum essentially from this Oracle result, because the spike in the in forward revenue expectations, etc., is it's the most ridiculous chart. Literally, it just the latest bar chart is the bar on the chart is, oh God, it's got to be about 6 or 7 times larger than any of the previous bars on the chart. So that really pushed up the Nasdaq and the S&P in particular, and the broader. It's a bit of a tale of two markets here at the moment. I mean, this story from Oracle and this confirmation of the AI and the data center thematic has really lifted a section of the market and probably distracted away from the fact that we had the worst revision of annual payrolls in history yesterday, and the fact that we've got a weakening economy as well. So looking at that result overnight, the Dow down a little, the S&P up 0.3. Given that PPI numbers were actually down 0.1 and lower than expectation and cooling, which is obviously just absolutely solidified rate cuts in the US this month, and potentially anywhere up to 50 basis points. But I'll get into that in a minute. I think that's a pretty poor result for the US market overnight, because we saw a lot of those chip and data center and AI names doing very well. I'll run through the market map here in a minute. The ASX sort of ground out an okay result yesterday overall. Unless you're in lithium stocks and the banks. Was weirdly the gold miners retreated as well. I'm not entirely sure what the selling pressure is on the gold miners, but I don't think they've ever been this cheap in history relative to the gold price. So there's some extraordinary value there for long-term holders, and it's definitely a far safer play as it stands at the moment than holding the gold, holding the actual physical gold or trying to trade the gold price. So a little bit of positivity in Asia yesterday. Iron ore is now knocking on these 6-month highs as well. So we'll probably have to look out a little bit for for around about the 11 o'clock mark, not only in the lithium market, but the iron ore market when China opens today for the ASX. Here's the heat map from overnight. Apple down 3%. Lucky for it to only be down 3%, as it just as it has done what it's done for a decade now, and pretty much released the same iPhone in a different wrapper with a better camera and another processor. So again, just keeping very consistent there from Apple in terms of disappointing the market on a new release. As you can see here, NVIDIA, Broadcom, Oracle. So Oracle was up 36%. There you go. So not entirely sure what the story is with Amazon. Possibly just on that it's a little bit more on the weaker economy end. And as you can see, the rest of the market was largely fairly weak. Oil prices didn't move up. A little bit of geopolitical stuff going on there, but they're fairly cyclical. I don't think I'd be chasing those. But if you're taking out the this Oracle-led rally, it's a largely fairly red heat map, so or relatively unchanged. So I'm still of the opinion that the broader economy will likely overrun this AI thematic, and this sort of move here is possibly a little bit of a last ditch bait to drag people in before we have a significant drift to the downside. So look, we haven't got much. We've got Adobe tomorrow morning, and obviously very important CPI tonight, ECB rate decision tonight as well. So the focus in Australia is not really going to be too much on the domestic market, I wouldn't have thought. Where everyone's in a bit of a holding pattern. Now, looking at this PPI number, that down 0.1, one of the lowest readings in a while. And, I'm going to just chuck my tinfoil hat on here for one moment. And so Trump fires the Bureau of Labor and Statistics commissioner last month. And, he wants rates down. He can't maneuver anyone on the Fed board. He's tried investigating them. He's tried firing power, which you can't do. It's independent for a reason. So he's come at it from a different angle now. And, strangely enough, he's getting exactly the figures he needs to get rates down. So the worst revision in US jobs numbers in history at 911,000, worse than the GFC by 100,000 plus. And surprise, surprise, inflation's down despite there being tariffs. So I don't really expect any major surprises to the upside for CPI tonight. I've been talking about this on the pod or in the morning call and our podcast for the last 3 or 4 weeks, and it is materializing. It's certainly not beneath President Trump. He just wants rates down by any means. It's the only thing that's going to move the needle on the debt. So in his mind, I think he would be thinking it's completely justified for the numbers to show the figures that he needs to get what he needs to get done. So yeah, expect more of it. I do believe that I think that Trump is more than willing, whilst he won't say it, to let the economy go into a short, sharp recession, get rates down a couple of percent, and then just fire up the printing presses and print their way out of trouble for the back 2/3 of his presidency. So I dare say that we could be a little bit on edge today geopolitically. Trump might say a few things fairly inflammatory. Charlie Kirk, which is a conservative and MAGA mouthpiece, was assassinated overnight. Condolences, obviously, to his family. The guy's 31, and I'm lost for words there. Whether you agree with him or don't agree with him, no one deserves that. But what it will do is fire up the very divided lines on social media. Trump's already rolling in National Guard and imposing these restrictions on certain areas to get rid of crime. I think this just helps him double down personally. So I'd expect there to be a little bit of internal geopolitical turmoil for the US, and that probably steal the headlines a little bit for potentially the next couple of days. Look, if we get a CPI number tonight, we're expecting 2.9 year on year. Anything around 2.8 to 2.5, I'm actually going to go out there and say I wholeheartedly believe that the Fed will go 50. And anyone who knows me or has seen any of the content I've done in the past, I'm not an advocate for lower rates. I think all we've done for 15 years is kick the can down the road, and it shows in the debt. I think a period or a 5 to 10 year period of some form of austerity from central banks, governments, and sideways growth is probably the best thing long term on a multi-decade point of view for the global economy. But people need to get re-elected, and the media does not hesitate in, going after central bankers, etc. And these days, so that's just not going to happen. So what's going to end up happening is we're going to end up saying, this boom and bust sort of mentality continue, for many years. It's certainly until Trump. We've got it until Trump's out of power, and I think I'm like I said, no one thinks long term anymore, but that's the world we live in. So you just got to all it means for you in terms of your investing is you just got to be agile and turn the ship around, because these markets tend to not go sideways anymore. They either are rallying or they're dropping, and they do it in really quick and severe fashion, particularly over the last decade, when you're talking about moves in indexes. So, outside of these two events here, I don't really expect too much on the economic front to affect markets. CPI is huge. I beware markets celebrating a 50 basis point cut. Because as Goldman Sachs and JP Morgan have released a research note in the last sort of 24 hours, they're advising clients to sell into it because of weakening, rate cuts for a genuinely weakening economy, which we basically haven't seen in 5 years. And people forget when payrolls turns, it turns fast. And it affects everything. And we've already got credit delinquencies, both on auto finance and credit cards, at pre-GFC levels. We've got the valuations of the S&P 500, 7 of 7 flashing overvalued, and we're at record highs here. I think this is dangerously vulnerable to the downside here at the moment. And you've got to remember, and for some context here, we're 31% higher than the April lows. So, a 20% correction is not even a blip on the radar, which will trigger bear market overall. So, and it is one of those things that September seasonal weakness, if it's going to happen, it's probably going to happen in the next 4 to 6 weeks. So, yeah, we're very much on the conservative side here at MPC, very risk aware, not short, but hedged up. So gold had a decent little rally overnight. Silver recovered a bit as well. 42's appearing to be resistance here at the moment. So a bust of 42.5 there, and silver could see a significant run. I'd be very happily buying on stop adding to our already large position. And look, gold's just keeps ploughing higher. So we do have government shutdown talks. They've started to arc up a little bit. They're in the news at the moment. It's hard to get a headline when Oracle's up 35%. Right-wing guy gets assassinated, etc., and Trump still, jumps on the headlines. So, but realistically, that that discussion is going to be more and more. There could be a government shutdown, in the next couple of weeks. So they discussed the debt ceiling. So not really sure what happened here. Lithium was the restart of the Cattle mine, lithium mine, and coal's been under the pump this week for some reason. I haven't really seen too many reasons behind that. Probably just cyclical, just due to the US being, having those horrible economic numbers. Uranium hanging in there, Bitcoin hanging in there. Iron ore just keeps heading north. This is the third time knocking on this resistance level here at the moment for iron ore. Any breakup from here would be 6-month highs, and usually that third time knocking when it keeps making high lows on the pullbacks. We could potentially see a bit of a breakout in iron ore, and that's very much China related. So, platinum's taken a bit of a hit early, late last week, but it's starting to recover again as well. But not really a hell of a lot of movement elsewhere overall. So, as far as today goes, I think it'd be fairly quiet. I think it'd be fairly risk off, and we'll. Yeah, we're all wait and see for the CPI numbers tonight, and once we get the all clear, we just, I dare say you're going to get, if it's a lower number for CPI, you're going to get those expectations of 50 basis point rate cut coming through. And in the news, and Trump will be a very happy boy, and I'm sure he'll be promoting that as well. So, but thanks for joining us this morning, and we will speak again tomorrow morning.